This video is going to be an analysis of the US equities markets and some of the major companies that I see. So this video is being recorded on Sunday, November 6th. So last Friday, we just had the first week of trading in November, and a lot of news came out regarding the interest rates and economic situation in the US. So we had the Federal Reserve interest rate decision, as well as the ADP employment report last Wednesday on the 2nd. And we also had the US ISM Services PMI report on Thursday and non-farm payrolls on Friday. So a lot of news came out regarding the US markets, and I'll quickly go over what the US equities markets look like, as well as some of the setups that I see around specific US stocks. Okay, so this is the NASDAQ. By the way, I'll be checking most of these markets on the weekly and monthly timeframes. So starting off, this is the NASDAQ. On the monthly, it looks like it's still going down. In terms of Ichimoku analysis, the current price on the monthly chart is still below the Tenkan-sen and Kijun-sen lines. We actually had a death cross a couple of weeks back at the beginning of September. And the lagging Chikou span is about to break the trailing price downwards. So I'd expect the most of the major markets still to keep going down, including NASDAQ. It's the most bearish out of all the three major US indices. So I'd expect it to keep going down until the previous 9,750 level, or the Kumo, which is at 9,300. And I'm kind of using the NASDAQ as a barometer for most of the tech stocks. As you can see, compared to the US 500, it's not as bearish yet. We don't have the death cross of the Tenkan-sen or Kijun-sen, and the Chikou span has not really touched the price yet. And comparing that to the Dow, this one is the most bullish out of all the three indices, but it still looks like it is going down on the weekly time frame. So on the weekly, we have this expanding wedge pattern here. So it's going down in the long term, as you can see, because the price is below the projected Kumo. But the last month has been more of a rebound, especially in the Dow stocks. You can see the price is now above the Kijun-sen, and yeah, the Tenkan-sen is still below the Kijun-sen, but compared to the other three indices, that one is more bullish. As you can see, the order of these prices below the Tenkan-sen, below the Kijun-sen, below the Kumo for the NASDAQ, but that's not the case for the Dow. I'll just mention how Ichimoku comes in useful here. So if you don't know the calculations for Ichimoku, I'll just say briefly that it takes the midpoint price in a certain time period to calculate all these lines. It's not the same as the moving average because it's not an average, it's the midpoint. So you can think of it as a median compared to the average. But because it takes the median, it kind of filters out these sudden sharp moves by indicating that the overall downtrend is still downwards. So yeah, mainly we are looking to see if the NASDAQ can break this 10,700 level to keep going downwards. But I was looking at some of the individual major stocks, and I'll explain reasons why I think it's going down further. So let's take a look at some of the major US stocks. So let's start off with some of these blue chip stocks, or FANG stocks as people used to call them. So Google is one of these stocks leading the sell-off last week. As we can see on the weekly time frame, the price got resisted by the Tenkan-sen line again, which is this yellow line. So yeah, last week Google had a pretty large sell-off in terms of the monthly. It cleanly broke through the Kijun-sen and is going downwards to the Kumo. Amazon is even more bearish if you look at the monthly time frame. It's actually going down below the Kumo now, and I'm expecting this to flip in the next coming months. So Apple is probably one of the strongest remaining tech stocks that hasn't had a huge sell-off yet, but we may see that happen. On the monthly, it's completely flat, but the price is technically below the Kijun-sen. So we could see more consolidation on Apple, or if we see like a meaningful close below the 138 to 130 level, it could trigger a further sell-off all the way down to the 80s or 90s. By the way, Apple is kind of just an outlier in the fact that people perceive it to be one of the stronger tech stocks, and that's how you can kind of see it's reflected in the price action here. But yeah, comparing to most of the other tech stocks, these are already in a sell-off, as you can see from Microsoft here. Quite representative of a lot of the blue chip tech stocks out there. Monthly, as we can see, it's retracing to the Kumo as well. There's a death cross just last month. Okay, so we're going into some of the more risk on tech assets. Netflix, obviously, we had a huge sell-off. This rebound retracement looks like it's ending, and we could see more sell-off going down. Even if you're not familiar with the Ichimoku lines or their calculations, you can see from price action that we pierced and closed below the previous low, 255, back in March of this year. And it's been retracing, but it's still below this support level. So it could go down sharply going forward. Facebook is one of the more bearish tech stocks. It has almost no support. The monthly is sharply down, and the weekly, we just had a sell-off for the last 2 consecutive weeks, pretty substantial level, broke all the previous support levels here. Let's see, for Tesla, it's also testing support at the 200 level. On the monthly, it is below the Kijun-sen, so also similar situation, retracing to its Kumo level. And I'll mention Twitter since they are in the news, just as a comparison. Some interesting dynamics with Twitter, as you can see, compared to the other big major tech companies. This is still flat in the longer time frame on the monthly chart, but we've seen more of a rebound and not the same sell-off as compared to the other tech stocks. It's actually rallying and broke the previous $50 level resistance last week, and it's actually closing above the Kumo. So ordinarily, this would be first signs of an uptrend. It's not stable yet, but it is testing the previous resistances to try and break through. And it may do that. As far as fundamental reasons, it seems like if you've been following the Twitter news, obviously they've completed their acquisition. They are now going towards a private company, with just last week fresh news coming out that they are laying off half their workforce effectively. So it seems like the market is rewarding some of their decisions to try and cut costs. Again, compared with the other major tech companies, technically their price action is not as bearish and even has some hopes of bullishness. So that's just an interesting comparison I thought I'd mention. Okay, let's look at some of the semiconductor markets. This is the SOX Philadelphia Semiconductor Index. Same story compared with the other major US tech stocks. On the monthly time frame, it is flipping its direction, as you can see with the same death cross. Chikou span about to break out, and it may go down to the Kumo. This is Nvidia on the monthly time frame. So it has reached a support level of about 115. But as you can see, the price action is still pretty weak, favoring the bears. It's taken 3 weeks to rally back up to the 140 level. But right now it is about to encounter the Kijun-sen, which is angling down and about to hit it. So if you are not the most familiar with the nature of Ichimoku, when you see a trend like this start forming and the price retraces to one of these lines, it kind of acts like a hammer or a guillotine to almost push or force the price down further. This has to do with the amount of time that's gone, that's lapsed since it last touched these lines. But yeah, Nvidia could go much lower, breaking the 115 support level. And by price action, some of these indications that you can see is we already closed below that support level on October 10th. So technically this close at 111, 112 was below the previous 116 low point in March. So just by price action, if you know it pierced the low and retraced, it has kind of a high chance of retesting that low and even breaking it to settle even lower. So this is just my observation from Nvidia, one of the leading semiconductor companies. Same thing with AMD. It's even more bearish. It hasn't retraced as much as Nvidia. It hasn't even touched the previous support, which was at 173, but it's already looking like it's slowing down in terms of price action. And the monthly, it's already at the Kumo and could go into it these next few months. I'll just go quickly through some of the other semiconductor companies. Qualcomm, same situation. Lam Research, similar situation. AMAT, also same. Intel, I'll just mention that it's the most bearish out of all the semiconductor companies. You can approach it from a fundamental reason or a technical reason, but the end story is that it has sold off the most out of all the leading semiconductor stocks. Yeah, here is Cisco. Okay, doing a comparison to the financial fintech stocks. If you pay attention or follow any of these companies, you'll know that they are probably leading all the tech companies down, possibly because the nature of their business is most sensitive to interest rates, which is obviously gone up this year. So yeah, this is the fintech ETF in general. It's already below the Kumo. Kumo has flipped. All the Ichimoku lines are angling downwards. So this is a broad representation of all the fintech companies. If you compare it to the blue chip like Visa, you'll see Visa is holding up a lot better. This kind of looks like the Dow Jones index that we saw earlier. It's showing a lot of volatility on the weekly time frame, but overall the price action is still going downwards. You can actually draw this expanding volatility funnel here, which kind of shows you where the price action is going. But overall, yeah, I expect even these blue chip stocks to follow the direction of the more risky stocks. Same with MasterCard, almost a mirror image. American Express, similar. Discover, similar. Now, compare all these blue chip fintech stocks with something like PayPal, and you will see the huge difference that these more, you could call them risky, these riskier fintech stocks are. PayPal sold off all the way. It looks like the monthly got tested by the Tenkan Sen and is going down further. So yeah, the weekly chart, it's basically not been able to pass the previous high of 100, and it's going down more towards the $60 level that it was at previously. You can see that was meaningful support back in 2018. But if the sell-offs continue, we may actually pierce that level and continue down further. Square, similar situation. The weekly and monthly timeframes are testing the 2018, 2019 support levels. I guess these are, not as bearish, but for example, Intuit, it's also flipped and going down. Bill.com, Affirm Holdings, some of these lending companies like SoFi, they are down the most. Coinbase, I'll talk about Bitcoin in a moment, but yeah, Coinbase is obviously sold off a lot too. Okay, so there's too many companies for me to go through all of them, but next I'll go over some of the other companies I saw having big moves last week, and that was the enterprise SaaS sector. So yeah, Atlassian, they I think had some of the biggest moves last week that I saw. They reported earnings, I think on Thursday, and then Friday they just sold off like closed at 28-29%, but they were down almost 33%, a third of their market share in one day. But as far as a technical analysis on the higher time frames, you can see that we broke this support on the monthly time frame at 160, 162. So now it got resisted by the monthly Tenkan Sen and has cleanly closed into the Kumo. So yeah, this kind of is a representative picture of all the other SaaS companies I'll go over. SAP, this is a good setup if you're following the same downwards direction. They haven't sold off yet. They're still in the middle of their retracement on the weekly time frame. But as you can see, the monthly is at the Tenkan Sen level, which should be resistance now. It also coincides with the $96 to $100 level zone in terms of price action. This was support back in 2019, but we pierced that earlier this year, and so this was the rebound in the last month in October. So if you're looking to short, this could be one of the better setups here. Same thing with CRM. This one also had a rebound in October, but it's also already gone down substantially. You can see last week was pretty much selling every day on the daily time frame. Weekly touched the Kijun-sen and is going down. It actually closed a little bit lower than the previous close on October 10. So this is also going down. ServiceNow, similar situation. They are another enterprise SaaS company. Monday.com, one of the newer offerings out there. This is also down substantially. So any of these IPO companies that you've seen come out in the last 2 years, they've probably sold off the most. This is, I think, one of the best setups I was able to spot in the downwards direction. This is Spotify on the monthly time frame. So it IPO'd back in 2018. We broke in all the supports and closed below it for 2 months consecutively now. So yeah, back in May, it had a slight rebound over the summer, but it was coming closer to the monthly Tenkan Sen level. So it seems like it's going to be pushing it down. This is too recent of a stock for the full Ichimoku picture to be drawn, but based on the candles that we have, you can see some of the Kumo is already forming. angled downward. Kijun-sen, there's only one Kumo line here, but if there were two, it's about to pierce the Kumo downwards. So yeah, if you're shorting, it would be the very best setups would be the IPO markets that have broken all-time lows and also going downwards. So technically, setups like these, they can go down an unlimited amount all the way to zero. That's just the technical setup behind this. It may settle at a price level that's significantly lower, but from the $70 level, we just can't tell where Spotify might drop to. Could get cut in half again, and end up somewhere, all the way down there once the graph gets drawn. Snowflake, this was a prominent IPO the last couple of years as well. So we broke this huge double top on the weekly and monthly time frames. So it came back to test that, and it's going down again now. So this is another nice setup to short, especially if you're waiting for earnings around December. Carvana, okay, yeah, so they went down almost 40%. Yeah, they already had a huge drop, but that doesn't mean they can't go lower. Yeah, the first history in here was like $12, $7 or $6. So yeah, we're nearing those lows of the IPO price again. What else? MongoDB also caught my eye. This was another huge rally and huge sell-off on the monthly and weekly time frames. So yeah, they broke this huge head and shoulders formation back on September, and it's just been going down ever since. I am actually holding some short positions on this one stock. Let's see, Match.com, another one that's sold off heavily. So yeah, these are all NASDAQ and tech stocks, but I was doing a comparison with some of the Dow Jones stocks in the Dow Jones. This is the Russell 2000 index. As you can see, it's not as bearish as some of the tech stocks, but it's still going down. 3M, yeah, it's closed below the 130 support level, retraced in October, and it's going down. Similar story. Berkshire, this is almost a mirror image of Apple and some of the other Dow Jones stocks here. But yeah, there's so many companies going down, selling off these last months. If you look at fundamental news, it's almost every week or every couple of days where a new tech company says they are going to be laying off a percentage of their workforce. And in fact, I had the news events from last week pulled up. So let me show these here. Okay, so Thursday was the non-farm payroll numbers, and these just give a picture. So we can see that the non-farm productivity, whatever these numbers are, it's coming in below the consensus, and the jobless claims are going up above the consensus. So automatically from these two events, you know that productivity is going down in the economy and the jobless claims are going up. So my guess is for the next several months, we are going to see continued trends in these expectations, more jobless claims than expected and less productivity than expected. So if you add these in terms of your technical chart analysis, all these indicate that a lot of these companies have further to fall. And I'll do a quick mention of Bitcoin. So this is the Bitcoin weekly chart, and here's what the monthly chart looks like. So similar situation to a lot of the risk on tech stock investments. This is sold off sharply. But yeah, this is probably the more risk on nature that some people have piled into in the last several years. So I'll mention the structure for Bitcoin and do a quick analysis here. We did have a head and shoulders formation. It was a pretty big one. And the reason why this is significant is you can see this head and shoulders is not exactly symmetrical. This right shoulder is a lot smaller than the first shoulder here. And obviously we closed below this and the price is down near 20,000 now. But the fact that this is not symmetrical shows that the buyers could not even push the price back in March of this year to be at the same shoulder level of 60,000. So there is a huge absence of buyers here. And if you see how the weekly chart is laid out now, you might think that we are at support since June, around 20,000. But this Kijun-sen is angling down, simply because time is passing. It takes the trailing 26 candles. So counting this last week, going back 26. So the last candle it counted was May 9th. So every week, even if we don't make a fresh new low below 18,000, this orange line is going to come down further, and eventually it's going to touch the price here. So yeah, where was it? So after next week, it's not going to take the high of the May 9 candle again. It's going to take the next high, which is May 30th. So every week, this line is going to come down. And my guess is when it touches the price, it is going to knock the price down through the support all the way to the next level, maybe at like 12,000 or 13,000. And on a big time frame, if you look at the monthly chart, this, we'll call it 17,000 to 20,000, isn't really a meaningful support in the monthly chart. It's basically just interacting with this high formed in 2017. So it doesn't seem like this will hold for much longer. It could sell off at any time and go down further. And if you look at this crash in the last year or 2 years and compare it to the same monthly or weekly chart back in 2017 when it last crashed, let me go into the weekly time frame and then go all the way back. So you'll see a similar setup here. Remember, we already had the price below the Kumo, below the Tenkan-sen, below the Kijun-sen, and the Chikou spline has gone down. But by the time this Kijun-sen comes down, it's gonna probably knock this price even lower back to whatever previous support that the market could find. And it's this huge, flag pattern where there is kind of a false hope that we found a support, but we don't get higher highs, meaning the buyers are not really coming in yet to push the price above the long-term midpoints. So as long as that happens, the price still has more of a chance of going down when it interacts with one of these lines. So yeah, just from a comparison with the last crash, we may have more room to go down, especially on the larger time frames. It may consolidate for a long period and then go down further. But the important takeaway I think here is if we don't see the riskiest stocks or assets start to rally, I don't think you will see a bottom yet in the US equities. And that's really important if you're trying to find a time to maybe put some funds into long-term holdings of these stocks that you may perceive as value. Just be careful. Always do a comparison between all the assets out there. If you don't see some of these markets trending yet, it may mean that there could be more selling to come on the US equities, or at least you can't say that the downtrend has ended yet. So yeah, just keep this in mind. And if you're looking to short, there are a lot of setups out there right now. So yeah, best of trading. And just be careful out there with what you're buying.